Good morning, everybody. This is Alex, Senior Account Executive at GDMFX with your European session outlook. We'll start with the North American markets. We have Canada's annual inflation rate slowed in February as a drop in gasoline prices pulled inflation away from the midpoint of the Bank of Canada's target. The CPI year-on-year came out 0.6% worse than expected at 1.4%. The core year-on-year 0.1% worse than expected at 1.9%. The month-on-month 0.2% worse than expected at 0.2%. And the core month-on-month is the only one that met expectations. With Canada's budget statement due out on March 22nd, a meaningful fiscal stimulus package may heighten the appeal of the Loonie as it takes pressure off of the Bank of Canada to further support the real economy. We may see a material shift in the monetary policy outlook should the Governor Stephen Poloz show a greater willingness to move away from the easing cycle. As far as indexes, the Dow Jones is 8 points up. Nasdaq was sideways. The Dixie is up to 95.15 from 94.83. The USD Canadian dollar was sideways on Friday, but we'll keep a close eye on the downside targets as USD Canadian dollar continues to search for support, with the next key area of interest coming in around 1.2860, which is 78.6% retracement, to 1.2831, which is the October low. Today's Tier 2 news is Chicago Fed National Activity Index from the US, and that's all from today. For the week, we have from the US on Thursday US durable goods orders, and Friday the GDP, and as I mentioned earlier, tomorrow we have the budget from Canada. Alright, in the EU, on Friday the labor costs in the Eurozone rose 0.2% higher than previous. The most surprising aspect of the most recent ECB meeting was the enhancement to the bank's TLTRO program. This is something that could potentially provide a lasting impact for European banks as well as the euro currency, both of which could have potentially been under immense pressure with a further decrease to the bank's already negative deposit rate. The enhancement to the ECB's TLTRO program will essentially allow the European Central Bank to pay European banks to lend money to borrowers. We will have the new targeted LTRO data come out on Thursday this week. Alright, on to the UK markets. Earlier today, we had a Tier 2 event from the UK, the Rightmove House Price Index, month-on-month, year-on-year. The month-on-month data came out 0.3% higher than previous, and the year-on-year is 1.6% less than previous. The sterling closed the week with a third consecutive week of gains versus the dollar. The pound's offense versus the greenback was mainly due to the dovish FOMC minutes, combined with the dismissal or the speculations that the Bank of England is considering introducing negative interest rates. Nevertheless, the weak economic performance and the Brexit uncertainty will continue weighing on the pound's bullish performance. The FTSE 100 lost 30 points on Friday and closed at 6,184. The 10-year gilt yields closed at 1.45% on Friday. The biggest mover was the GBP Australian dollar, 110 pips up on Friday, 205 pips range. The CPI data is due Thursday. This will be the main event for the UK. On to the Asian and Pacific markets. The Shanghai Composite Index rallied intraday Monday above the 3,000 level for the first time in 2 months. Policymakers loosened controls on margin lending. Today is Vernal Equinox Day, which means the banks are closed in China. In the Pacific, the Australian currency jumped to the highest level in close to 9 months last week. Tomorrow we'll have Governor Stephen Poloz holding a speech on the further outlook for the Australian dollar. For the New Zealand dollar this week, the major release is Wednesday's trade balance report. Exports are expected to increase to 4.01 billion from 3.90 billion, while imports are expected to remain steady near 3.9 billion. A further increase of exports past the expected level of 4.01 billion could be seen as reason for the New Zealand dollar to go bid even higher, as the bank could see this reason to limit further hikes. The bank is still expected to cut later this year once more, so any news that would show this move as unnecessary would be another reason to buy the New Zealand dollar against weaker currencies. Alright, onto the commodities. We had the last Baker Hughes oil rig count. It added 1 oil rig after 12 weeks of steady cuts. The US oil prices briefly rose above $41 a barrel Friday, supported by expectations of a production freeze by major exporters and dollar weakness that have pushed prices towards a 4th straight weekly gain. Overcoming key resistance around 41.80 is crucial for sustained upside on crude oil. Gold had a range of $20 at 1,244 now. Silver had a range of 34 cents at 15.75. Now crude oil had $2 range at 40.66 now, and natural gas is trading at $1.87 at the moment, with a range of 6 cents on Friday. Alright, that was everything for today. Thank you for the attention. I'll see you next time. Goodbye.